all those joining us on this broadcast. This is Krishna Kumar, and joining us in the studio is Karthik Malhotra and Suyash Maheshwari as always, and you're watching Business Plus. Brand new morning for the markets. We also have a very special market guest joining us. We have Mr. Ambareesh Baliga now joining us on the broadcast as well. Mr. Baliga, thank you so much for taking time out to be with us here on Business Plus on News 9 Live this morning. Before we come to you, we have Suyash with us, who's going to quickly take us through the market action this morning for the first hour or so this morning. Suyash, if you can quickly run us through how markets have opened for trade this morning.
So, Krishna, Indian markets saw another positive start tracking a rebound in global equities. Now, if yesterday Nasdaq Composite ended with gains of over 1%, S&P also surged, and most Asian stocks were also trading in the green. So Nifty is taking cues from the global markets, and as you can see at 9:40 a.m. this morning, Nifty 50 was up 0.23%, sitting comfortably above 19,400 levels. Sensex was also up about 0.2%, above 65,300 levels. Mid cap and small cap indices were also trading in the green, and they have rather outperformed the market in opening trade. And Nifty Mid Cap 100 was up about 0.7%, and the small cap index added 0.68% in morning trade.
All right, so that's the opening trades. Before we get into sectors and stocks, Mr. Baliga, let me bring you into the show. Talk to us. Market snapped a bit of a two-day losing run yesterday, and then you have a full opening in the green across the board. Talk to us your thoughts on how markets are trading after the bull run we saw last month.
See, at these levels, markets are a bit iffy in the sense most of the triggers are done with. Earnings season is over. Now you have the inflation issue in front of you, and because of which it's possible that we could see one rate hike before we start seeing rate cuts. And also the rate cuts were expected sometime in January 2024. But now looking at the inflation, even that could get delayed. So that's a bit negative for the markets. And you have a China economic slowdown and a downgrade. I think that will have a fallout on the other countries, including India. And lately, we have seen in the last couple of weeks that FIs who had turned buyers have actually now turned sellers. So I think overall the markets should correct from here, because we have had an extremely good run in the last few months. Markets have become expensive at this point of time. You have had a number of stocks, especially in the mid cap and the small caps, becoming multi-baggers in just about 4 or 5 months. So I think there is a bit of euphoria. There was a bit of euphoria, no doubt. And I believe that the markets should correct from here. But technically, I think 19,200, 19,300, this band, I think is a very good support. Once we break that, possibly we could see a decent decline. And I would say that the markets should see levels of about 18,500 levels in case we cut 19,200 levels.
All right. That's the broader markets, sir. Just stay with us. We'll quickly check of the sectors and stocks in action this morning as well. Then we can discuss the markets in detail for the day. Suyash, you quickly talk to us the sectors in action in the morning and the stocks in action this morning.
So, Krishna, most sectors were trading in the green today, barring Nifty IT, which was down 0.24% in today's trade. Nifty Bank was up 0.24%, and it is trading currently above the crucial 44,000 levels. If it continues to stay above that, experts expect the rally to continue in the banking index to about 44,500 levels. Nifty Auto was another index which was in the news today, and the index is up about 0.5%. FMCG is up about 0.53%. Pharma was flat is opened on a flattish note, whereas Nifty Metal is up almost 1% in today's session.
So okay, bank, auto, FMCG and metal stocks, in the news today. Talk to us about stocks per se. If you can give us an idea of what are the stocks in action this morning.
So the stocks that we were tracking this morning are Paytm. Paytm was up over 2% in today's trade. As you can see at 9:40 a.m. in the morning, it was up about 2.17 after Vijay Shekhar Sharma in a letter to the shareholders said that Paytm is investing in building artificial general intelligence software stack. Now he added that the AI system will help various financial institutions in capturing possible risks and frauds while also protecting them from new kind of risk related to AI. Another stock that was in the news today was Adani Enterprises. The stock was up about over 2% at 9:40 a.m. in the morning after promoter entities bought another 2%, 2.22% stake in the company, raising their holding to about 69.87% from 67.65%. Welspun Enterprises were another stock which was in the news today. The stock was up about 2.15%. Welspun Enterprises has acquired 50.1% stake from Michigan Engineering's at a price of 137.07 crore. Union Bank of India was also in the news today. The stock was trading, opened about 1% higher, but by 9:40 a.m. it saw some profit taking over there after the company announced that the board has approved the QIP of 5,000 crore. SJS Enterprises was also in the news. It was down 1% after there were reports that the promoter entity may offload as much as 30% stake in the company in today's session via block deals.
All right, so Suyash there getting us a roundup of the stocks and sectors in action this morning. Let's take this back to Mr. Ambareesh Baliga. Mr. Baliga, you gave us a sense of the overall markets, but talk to us in terms of sectors. We have certain sectors in action this morning. Which sectors do you think are the ones worthy of investing, have value in them going forward, assuming that there is going to be more correction going forward, and of course, stocks that really catch your fancy?
See, I think the sectors where there is still value at this point of time is pharma, which has been an underdog for about 18 months, and now we have seen action in this space in the last 5 to 6 months. I suppose we should see, this sector overall moving up at least another 15 to 20% more from where we are now. Clearly looking at the sort of earnings which we saw, US FDA's issues are mostly behind them. So I think we should see decent performance from pharma going ahead. And here, my picks would be Dr. Reddy, Lupin, Sun Pharma, the leaders in the sector, where I still see a very decent, up move from here. The other sectors where I would be positive on is the auto sector, which has done decently well in the past couple of months. And I still see, looking at the sort of order book position of most of these companies, we should still see some more upside. And here my picks would be Maruti, Tata Motors and Ashok Leyland.
Amrish, in the pharma space, the pharma companies are divided into 5 or 6 segments. There is the hospital segment, there's a generic business, there's a radiology business. Any particular theme which one can look at?
I would be looking at those pharma companies which have decently high exports, and because of which I'm choosing stocks like Lupin, Sun Pharma and Dr. Reddy's. Among the hospital space, my pick would be Apollo Hospitals. But if you're talking of diagnostic, I clearly see a lot of competition coming up there. So margins would be under pressure. I think COVID season was an extremely good season for them, and because of which we saw a number of IPOs from that space. But at these levels, I find most of the diagnostic companies quite expensive.
Talking about the auto sector, the rally has kind of fizzled out in the past couple of weeks, but EV stocks are relatively doing better. So is there a possibility of, still investing in those stocks?
Absolutely. And clearly you have Ashok Leyland and Tata Motors having their decent share in the EV CV business, CV in the sense the buses business. So because of which I've been recommending Tata Motors and Ashok Leyland.
All right, I had to ask you something about the IT sector, the IT pack. It's a favorite as far as Indian stock market is concerned. Most blue chips are IT stocks in the first place. We've seen a bunch of IT companies on a spree, on an acquisition spree. HCL Tech acquired a company, Infosys acquired a company. But Suyash here tells me that a lot of those acquisitions and the boost from it has been priced into the IT stocks already. So tell us your view on the IT pack per se.
In fact, we saw a decent slowdown in the IT space, especially on the margin front, because the costs had gone up. We had seen that the discretionary order flows had slowed down. And that was very clear in the sort of earnings which we saw in the last 2 quarters, and especially this quarter. Even the management commentary from most of them hasn't been too great. But then I see a decent sort of a recovery in IT possibly over the next 2 quarters. So it should be a time to prepare a list of the stocks you'd like to buy. And I think over the next 1 or 2 quarters, you'll get a decent opportunity to pick these stocks at slightly lower levels. And here also, my picks would again be the top companies, which is TCS, Infosys, and HCL Tech. And among the mid-sized ones, I would clearly look at a stock like KPIT, which has anyway become a multi-bagger, but still, looking at the performance, looking at the sort of order flows which they have, especially from the EV space, I think we should see much better levels. And the other stock is Tata Elxsi.
Mr. Baliga, good morning. Karthik here. Thank you for joining us this morning. I want to draw your attention back to the pharma space and this new directive coming from the government asking doctors to prescribe only generic drugs, unbranded drugs. Does this mean that we could see the likes of Dr. Reddy, Cipla, Lupin, etc. suffer despite these being your stock picks?
The effect may not be as much as those which are completely like India centric or India oriented. I think they would suffer more than companies like Dr. Reddy, Lupin, or Sun Pharma, which have a decently high margin of exports. And being established for this long, I think it'll take a while for this to play out, because despite the doctors prescribing generic names, you'll see the pharmacies, doling out these branded your items against the generic names.
All right. And if I can go back to the auto sector, you mentioned that one of your picks happens to be Maruti Suzuki in addition to Tata Motors and Ashok Leyland. The data suggests right now that Maruti has been a little slow when it comes to adoption of electric mobility as opposed to, let's say, a brand like Tata. And at the same time, the hottest selling category in passenger vehicles right now are SUVs, where again, Maruti is not one of the front runners. What keeps you bullish on Maruti Suzuki?
See, one thing is very clear that Maruti's roadmap for EV rollout is 2025, and they have stuck to that for a while. Clearly, I expect the EV market to mature EV market in the sense for passenger vehicles to mature by 2025. And that is the time you'll have the big bang launches by Maruti. And as far as SUV is concerned, they've recently launched an SUV, which again has got a very, very good response. And I'm expecting a decent number of launches over the next 12 months from Maruti. And I think that is what will keep the interest on.
Okay, and talk to us, sir, about global cues as well. Hopefully, crude should hover in the range of about $90 a barrel and should not exceed that. So that should at least keep the current account deficit in check. But what about other global cues, including recession and inflation in the US and the slowdown in China? What is the kind of coupling that you would see on Indian stock markets?
See, like you said, clearly the silver lining is the crude. As long as it does not cross that $95 barrier, that may not be too negative for India, and we can still manage with crude between 90 to 95. But then the sort of a slowdown which we are seeing globally, I think is going to affect us to a certain extent, because when you have fire all around you, surely the heat is felt. And because of which I've been a bit skeptical, bit cautious on the Indian markets. And clearly, if you look at the sort of order flows which the exporters have been getting, I'm not talking of India, I'm talking of globally, and especially China. The sort of export orders which have been flowing in from Europe and US for Thanksgiving and Christmas. Most of the orders get over by August, because the deliveries should happen by November, first week, November, second week, to be in time for Thanksgiving and Christmas. I believe these order flows have been much less than what we have seen in the last 2 or 3 years. And some of the exporters are saying that the orders are, as much as 2018. So we are actually going back 5 years. I think this will be a dampener once the real figures start coming out. And once we look at the demand in the next 4 or 5 months, during the festive season, I think that will be a dampener for the global economy as well as the markets.
Yeah, go ahead, Suresh.
Amrish, JFS is one of the stocks that has been in the news. It was around 5%, hit the lower circuit yesterday, another 5% decline today. What's going on with JFS?
People were really expecting a big bang listing for Jio. Because earlier we thought it should list at about 130 to 160 levels, but then in the month of July, we saw that the valuation came to about 261, which was the discovered price. So people were expecting it to, have a big bang sort of a listing, possibly go to levels of 290, 300. But I think what spoiled the party was the passive funds, which had to exit Jio Financial in the next 3 days because it would be going out of the indices, both the Nifty and Sensex, in the next 3 days. So there was a approximate selling of about 15 crore shares. I don't know how much has come into the markets, but that is the quantum of shares which are there with the funds, with these passive funds. So clearly, I think that is what has dampened the sentiments because of which I see possibly the stock could come down to levels of about 200, 210. I think at those levels, it could be worthwhile to buy for long term because we should remember that the AGM of Reliance is on 28th. And I'm sure, they will be discussing about Geo Financial's vision and the immediate prospects. So I think that is what will possibly, give it support. And we should remember that this stock, which has a market cap of about 1.4, 1.5 lakh crores, you really can't ignore that from the indices going ahead. So over the next possibly 8, 9 months, possibly the next 1 year, we should see it coming back to the indices.
Right. I wanted to ask you about Jio Financial Services just to, in a sense that me and Karthik, we keep discussing the same thing. We don't know what is the product that's going to come from Jio Financial Services to hit the market. We don't know when this AMC's product, it could take anywhere between a year to 2 years before a Reliance, BlackRock, mutual fund or SIP hits the market. But the levels of it's going to become a permanent feature in the stock market starting September 1st out of the trade for trade segment. How do you, please go ahead, sir. Explain this to us.
Yeah, because see, when you look at Jio Financial, you cannot be looking at the balance sheet and saying that this is what like the EPS would be in FY25 or FY26, and based on that, I'm valuing it. That is, that surely will not be the way to value Jio Financial, at least in the foreseeable future. What people are looking at is what has Reliance Group done over the last 2 decades as far as their new initiatives are concerned. So first is the telecom, where they came in with a big bang and they disrupted the market and they become leaders. Look at what happened to retail. Again, the same story. They are by far the largest today. So it's expected that with the deep pockets which the group has and the sort of data and the reach which they have as far as India is concerned, Jio Financial clearly will be a disruptor in the BFSI space. And possibly what we saw Bajaj Finance doing in the last 10 years, I think Jio Finance will do much more in lesser time. Looking at the track record, and I think that's what people are betting on, and that's how people are valuing this stock.
It's already the second most valuable NBFC in the country on the day of listing, despite being down 5%. So Yash, you were going to ask something.
Yes, so I have a follow-up question on that. You said GFS could be a major disruptor in the BFSI segment. So what company's market share could it possibly end up eating?
Like the name which I took, Bajaj Finance, could be one which could. Lose because of Jio Financial, because today, it is getting a premium sort of valuation. I think that premium will start coming down.
Oh, okay. Now that we are talking stocks, one stock that has been in news, especially for the last 24 hours or so, is Titan, a much storied stock. We are planning to get the CaratLane management very soon on the channel as well. But talk to us. That's a much storied stock, dependable stock. For such a long time. What do you think is going to happen to it post the acquisition of CaratLane?
I believe that this acquisition again has been a bit expensive, no doubt. But I really don't see Titan performing the way it had in the last 2 decades, because sort of competition which has which is coming up in this space. And again, the competitors also are decently large. So I don't really see the sort of a move which we have seen in Titan over the last few years happening, at least in the near future.
Right, we have Apple Watches hitting the market, for God's sake.
Mr. Baliga, before we let you go, I just have one final question. When we are talking markets, when we are talking macroeconomy, inflation in India, especially food inflation in India, is not something that we can miss. What are your views on the FMCG sector and on processed food stocks, including those of ITC and Dabur? How should FMCG and packaged food businesses be looked at right now?
See, I mean, because of decent monsoons, I mean, catching up, I mean, although we have seen August being a bit deficit, but it's expected that overall monsoons should actually cool down the food inflation. So I'm not really too worried at this point of time about the FMCG stocks because clearly, I mean, going ahead, we will have a decent amount of rural demand also coming back. So that's what I'm betting on. So I won't be negative at this point of time.
All right, won't be negative. Positive is the word coming in from Mr. Baliga. Mr. Baliga, thank you so much for taking time out this morning to speak to us and enlighten us on every single thing from the broader markets to sectors to individual stocks and all the news that's doing the rounds as far as the stocks and stock markets are concerned. Thank you so much, sir. Pleasure having you. Hope to keep having you as often as possible on the channel going forward as well. But wishing you a good trading day going forward at this stage, and we'll let go of you with that. Thank you so much for being with us. Ambareesh Baliga, independent market expert there, joining us on the show. Karthik, fascinating insights. Who would have thought? Titan's CaratLane acquisition we thought was probably a great upside to the stock, but then the overall business, the watch business, going forward. Even the jewelry business, enough and more competitions that is in the market. So we'll have to wait and watch how Titan stock, and of course every other stock we've discussed. But in the meanwhile, something big is happening. As stock markets continue their consolidation drive, which is what is happening right now after all the bull run we saw last month. There are big things happening at the global macro front. That will definitely have an impact on the stock markets in the longer run, at least in the medium term, at least if not the short term. And one of them is certainly the BRICS summit that is taking place as we speak, Karthik, and Prime Minister Modi is at this BRICS summit. BRICS as a grouping, in fact, came about because they had similar economies at the end of the day, more than anything else. And so PM Modi at BRICS summit talked to us how crucial is the Indian economy to BRICS as a bloc at this stage, and also how do you think it's going to impact our policy making going forward?
So, Krishna, you're right. I think, Prime Minister Modi is going to be at the BRICS summit in Johannesburg, South Africa today. We already have the Forward Party, Advanced Party there. We have Vinay Quatra, the Foreign Secretary, Piyush Goyal, Industry Commerce Minister, already at Johannesburg. PM Modi is going to follow suit. Now, why was BRICS really set up? I think it's important to go a little back into history to arrive at the need to have a bloc like the BRICS. Now, BRICS was touted to be among the most, formidable emerging markets bloc ever built. Very separate from, let's say, a SAARC or an ASEAN, where ASEAN was this conglomerate of Southeastern Asian economies, and SAARC was the South Asian region as a whole. But I think BRICS was formed primarily on the count of being participating members being the most formidable emerging economies. And look at what BRICS started off with: Brazil, Russia, India, China. What got added later was South Africa. So incidentally, BRICS was the term coined by Jim O'Neill, a Goldman Sachs economist. Late 1990s is when apparently the idea was toyed with in his head, and it took about 2008, 2009 for it to crystallize. And the first meeting ever happened in 2009. Now, what was the need for BRICS? The need at that time was that there was this Western bloc, and there were these multilateral banks and agencies called World Bank and IMF, which had this agenda of being the big brothers to emerging markets and developing economies and aid them with their growth, do research papers on them, reports on them, and any time that the emerging economies needed some infusion of cash, the multilateral banks like IMF and World Bank would step in and have this sort of overarching big brotherly sort of treatment. So the whole purpose of having BRICS was to have a new development bank, which incidentally got formed in China. Shanghai-based new development bank emerged as a counter to World Bank and IMF. And the idea really then was that this bloc is going to fend for its own needs, is going to fend for its own requirements when it comes to any sort of monetary support. Did it really serve much purpose? I'm not sure. As we are placed today, what is India's role at BRICS, I think it's very difficult to, to pin some hope on anything constructive coming out of BRICS, because you've got two players called Russia and China respectively who are equal stakeholders. Now, let's look at some data, and I think let's put it in perspective, and that data could help us understand that BRICS, these 5 countries that that BRICS is all about right now, account for about 40% of the world's population. These 5 countries have 4/10 of the world's population. But what are the global exports? Just about 20% or so. Now, what is the share of world GDP? About 1/4. Now, according to Piyush Goyal, who already spoke at Johannesburg in one of the preliminary manufacturing meets, he suggested that the contribution of BRICS to manufacturing today and the contribution of BRICS to the overall GDP of the world is almost as large as the G7 nations, which are the developed bloc, so to speak. So, G7 and BRICS are sort of equitable, but look at the population. The population is 40%, but the output is pretty much that of the rest of the G7. Now, what would India want to push at BRICS, and what is the kind of countermeasures that will be deployed by the rest of the world versus what China would like to push at BRICS, and what are the countermeasures that India should deploy? I think this goes well beyond economics and goes in the realm of geopolitics. Now, China will definitely want to get some sort of trade agreements signed within the bloc to spur up its own manufacturing. Now, what is on agenda at BRICS also is the fact that that there is need for, let's say, more members to get added to BRICS. Should more members be made admissible into this union of 5 nations is something that is up for discussion. Apparently, 20 new countries have stated some sort of an interest in being part of the BRICS union. This includes countries like UAE, like Saudi Arabia, which are big on oil. Right. It also has some smaller countries which may or may not be relevant emerging markets, to look at from a global perspective. Cuba, for example, Comoros, for example, a small island nation.
How many people know Comoros?
Yeah, northeast of South Africa. It's a. I had to actually Google up Comoros, to be honest.
I'm sure.
So it's a small island nation. Cuba, what is its outside
Another
of
small
cigar,
island
possibly,
nation.
what is its, and pop culture and cult culture, what is Cuba's contribution really, to world economies?
Apart from cigars.
That's what I said, cigars and maybe, just some cult
Music
culture, music. So nothing much. So should more members be added to BRICS? I think again comes to the fundamental question of the relevance of BRICS. Is BRICS really important today? Now, India had in, I think, 2018, taken a very, very clear strategic call of not being part of RECP, the Regional Economic Cooperation Pact, which China is one of the biggest propagators of. India said, we don't want to be a regional player. We don't want to be limiting ourselves to free trade agreements and pacts within the region. And we have global ambitions, and we would not want to be governed by the pricing and the agreements and the overall cartelization of global trade and global contracts within the region only. We want to work independently as an independent emerging market and have our trade dealings with the rest of the world. So, in the same context, what is the relevance of India in BRICS today? Now, another point on agenda really is, apart from global trade, is this whole internationalization of currencies. And could there be a BRIC nominated currency which could dethrone the dollar? That is up for discussion. But enough and more has been already dismissed on account of the fact that any new currency, like the euro, for example, you cannot have a regional currency which could compete with the dollar, especially when there are such disparate players in this whole bloc, which includes Russia, which is, I mean, Putin is not even attending BRICS because he's on the international criminal law which forbids him from traveling for any such international summit. So, can we dream of, and should we dream of having a currency which comprises of these 5 players with such disparate geopolitical standings and such disparate economic outlook and growth projections, and couple ourselves together? I mean, you cannot have a Russian ruble and a Chinese yuan and an Indian national rupee all combined as one currency which could compete with the dollar. In fact, economists are laughing that idea over. So I think that is going to be summarily dismissed, even if it comes up for discussion at the BRICS summit. Now, what India should really push for, of course, is manufacturing. That is some place where we have seen when PM Modi was in the US, when PM Modi visited France. I think manufacturing and getting investments into India's manufacturing sector, opening up the PLI in areas of India's interest, from electronics to semiconductors to mining to even new PLI, likely PLI schemes in toys and leather. This is something that India should try and push for. But India cannot help but notice that one more person sitting on the BRICS table is going to be Xi Jinping, who will have a similar agenda to spur up his own economy and his country's economy. So I think there is going to be diplomacy at play. There is going to be geopolitics at play. There is going to be perhaps some semblance of trade pacts, trade agreements, trade MOUs being discussed, if not signed. But beyond that, I believe personally that BRICS today is not as relevant as it was set out to be in 2008, 2009. And over the last decade and a half or so, all these 5 economies have moved in very different directions. The growth in emerging markets has been led primarily by China, and in the last 3-4 years by India. Last 2 years, India outshining China when it comes to growth. Russia has gone completely rogue and is not a trade partner anybody wants to be seen with, colluding with. And Brazil has fallen off the radar completely. South Africa, yeah, well, I think manufacturing in Africa is something on South Africa's agenda. And if you talk about Africa, the political risk and the national risk in South Africa is much lesser than its other counterparts in the whole African region. But I think India, China, South Africa will all be vying for manufacturing. And the question really is, how much of cooperation would you want to exhibit and display in this group of 5 nations? And how much of it would just be diplomatic lip service is something that is yet to be seen.
Well, we will bring all the updates on the BRICS summit as well, and all the impact possible on Indian economy because the decisions and the discussions that went on at BRICS. Karthik, but while you were giving this 101 on what this upcoming BRICS summit is all about, you spoke about the currency and how at this BRICS summit that entire idea of one common currency for all BRICS nations is being summarily dismissed by economist Jim O'Neill, and as far as Indian Foreign Minister S. Jaishankar is concerned as well. They've dismissed this idea of a common currency with the kind of troubles that the euro is going through in Europe only.
Imagine a Brexit becoming a Brixit at some point.
I was in fact thinking it was called a BRIC before South Africa got added from a singular. It went to plural from BRIC to BRICS in the first place.
That's right.
But we don't know if there's going to be a Brexit eventually. But I want to get back to currency. And when you talk about currency, the Indian rupee, there's been a lot of push from the RBI and the government for the rupee to be the next dollar, if I may, eventually in the future, to make rupee the form of currency for trade across the world, especially as far as all Indian trade is concerned. That's been the push. A lot of efforts have been taken. Some deals have been struck with, say, Russia and a couple of other countries where the trade deal is struck in rupee terms and not in dollar terms as well. But talk to us about the latest push from the RBI for the rupee.
So, Krishna, what happened about a week ago, 10 days ago, was India's first trade settlement in INR with UAE. Prior to that, there was this one small instance of some customs border settlement with Bangladesh, our neighbor, also done in INR instead of USD. But you spoke about Russia. India has been for the last almost a year plus trying tooth and nail to settle and circumvent the sanctions and route some sort of trade settlement for all the oil we've imported from Russia in INR, and that has not happened. Now,
and we are the single largest importer
of Russian oil. Right, and this is something that we are processing. The Russian oil is being processed in India, adding value to the Russian oil and exporting it even to the European markets, much to the ire of many of the Western partners who support the sanctions, perhaps rightly so. Now, the point being that India has not been able to have any headway, any breakthrough in settling the trade deal with Russia in INR. Instead, because the dollar bills are just as insignificant as pieces of paper for Russia, India has in fact started settling trade bills in yuan, which is bad news for the Indian national rupee, but good news for the Chinese yuan, which incidentally has been the most devalued currency in the Asian pack, but we'll come to that later. Now, the fact being that with UAE, what the RBI right now is doing, it's giving these little nudges, these little pushes to Indian banks, local banks, saying that, hey, you tell your clients who are trading with UAE to settle trade not in USD, but either in AED, which is the dirham, or the Indian national rupee, INR. And if you are able to convince your clients to have these settlements in local currencies, it means that India's need to buy dollars to settle trade bills reduces. India already has $600 billion worth of US dollars stashed away in the coffers of the RBI, and that pretty much is enough to meet any BOP crisis that may emerge, unlikely scenario, or any sort of stabilization of the Indian rupee if it were to get devalued at any stage. But India is saying that RBI is saying that we want to push for INR settlement or local currency settlement. The idea is as much about pushing the Indian rupee in global trade as it is about reducing the dependence on the US dollar. So India is saying that countries with which India has got a large trade deficit, UAE being one of them because of the oil block and because of the oil import from UAE, India is saying that either AED or INR is something that we would prefer trade settlement in. It reduces our dependence on the dollar. We are buying lesser dollars. It means the dollar price against the rupee does not shoot very high, and more transactions on rupee would mean that more foreign players, foreign countries are buying the Indian rupee, valuing it higher.
And that pushes the rupee out into the open market. As much more trade happens in the Indian rupee. That's what we want. Quickly, Karthik, fascinating what we're trying to do with the rupee. Lot left to be seen how it's, to start with, let's start doing rupee deals with Russia. Let that come through and then we can,
But then, directly doing rupee deals with Russia is going to become a sanctioned action.
True.
Which becomes the problem. So some sort of a circumvention of, which is where Vostro accounts become very relevant. Now, RBI last year had also initiated Vostro accounts, which are accounts opened by foreign institutions through their banking partners with Indian accounts, where they park money in the Indian account for future dealings with other clients, other partners within Indian borders using the INR. So you do a trade deal with, let's say, country X, and country X, instead of settling that trade in USD, settles it in INR, but parks that INR, does not repatriate that INR, keeps it in an Indian bank for any future payments that need to be made in India. But even the Vostro accounts have not yet taken off.
All right, Vostro accounts also have not taken off, but we are bullish on pushing the rupee. The RBI is. One thing the RBI is not bullish on is definitely a rate cut at this stage. We are in the rate pause moment as far as India is concerned. But just next door neighbor China is on a rate cutting spree altogether, Karthik.
Absolutely. So, China, Krishna, as you know, and we've discussed so many times over, but just for the sake of our audiences listening to us today, China is facing a very different global problem. The world is grappling with inflation. The world is grappling with increasing prices, which is inflation. And to tame those rising prices, central banks across the world want to suck out money from the hands of their citizens, of the public. And to do that, it increases the repo rate. That repo rate, incidentally, then gives them better interest on the money that they park with their banks, and hence the money in the hands of the public goes into the banks and in the banking system. And then that banking system is able to deploy that money to spur up economic growth, broadly speaking, right? China is facing a very different problem. China is facing the antithesis of inflation called deflation. It's facing a situation where whatever goods and services are being produced in the country does not have any takers. And it does not have those takers simply because the public in China wants to hold on to their cash. They are not very sure about the direction in which the Chinese economy is going. Jobs are slow to come, unemployment is high, and the Chinese economy, the Chinese population is holding on to all the cash in their hands, not wanting to make big purchases simply because it doesn't know where the economy is headed. And to spur this demand, now what is happening as a result of that? Prices of goods and services are coming down, and that is deflation, because suppliers want producers want people to buy. So make it cheaper, make it cheaper, make it cheaper, make it lucrative for people to go and make those purchases, but people are not making those purchases. So what China is doing is, instead of raising rates as the rest of the world,
it's making money cheaper.
It is making money cheaper. Put more money in the hands of people and let them go out and make those big ticket purchases. Now, housing is one of the most critical harbingers of China's growth, in addition to manufacturing, of course. For the domestic demand, manufacturing is for the rest of the world, but for the domestic demand to spur up, housing is one sector which has completely slowed down in China, to a point that one of its largest real estate players, Evergrande, has filed for bankruptcy in the US courts. So the housing market in China has slowed down, but China needs that housing market to pick up. So what it has done this time, instead of cutting the repo rate, it has cut the prime lending rate, PLR, which in China is called the loan prime rate, LPR. So the LPR has been cut down by 10 basis points, making housing loan as cheap as 3.45%. 10 basis points reduction there. So you can actually take a home loan in China at under 3.5%. In India, home loans range between, let's say, 9% and upwards, 8.75% and upwards. So you can get a home loan in China for a third of what you have to pay for a home loan in India. So imagine dirt cheap EMIs, hoping that the real estate sector picks up some momentum and people go out, make those high value purchases, and keeps the real estate sector in China
afloat.
Right.
China's real estate sector has been down in the dumps for nearly a year and a half, 18 months, and it all sort of, eventually the big collapse came in the form of Evergrande filing for bankruptcy. But the sector has been in pain for a good 18 months now, from what we understand. That's the reason why you now finally all of that pain has resulted in a lending rate of now less than 3.5%.
One challenge that could come, because anytime there's a cut in lending rate across the world, it doesn't sort of take my memories away from what happened with the global meltdown of 2008, the subprime crisis, right? Subprime lending rate.
Yes.
And that led to a global recession. So China going that way, well, maybe in the short run it could spur up some demand, but in the long run it could be more trouble than solving a problem.
Right. Talking about demand, Karthik, guess, I'm going to take this all the way. What about spurring demand? There is, I'm going to take this away from China. I'm going to take this away from all the housing and all the things we talk about, and talk about the demand for whiskey. And India is a majorly whiskey drinking country. We all know that.
Come on, Krishna. We are drinking coffee early in the morning.
Yeah, well, I'm having tea in this mug for all those watching. But what has actually happened here is that, Karthik, Indian single malts are now outselling their Scotch counterparts. That's right. The Indian single malts, I'm sure many of you know these names: Amrut, Amrut Fusion, which is an Indian single malt; Amrut Amalgam, which is an Indian single malt. Can you believe it, Karthik? Amrut Fusion and Amrut Amalgam sell more than Glenfiddich 12-year-olds and Glenlivet 12-year-olds in this country. And to help us understand what is going on over here, how are Indian malts beating Scotch whiskies, we have none other than Mr. Ashish Kapur, founder of Whisky Samba and one of the most famous restaurateurs in this country, joining us live on this broadcast. In fact, he's busy setting up the brand new Whisky Samba in Hyderabad. Ashish, all the best with that. The pictures look absolutely fantastic, as good as the iconic Whisky Samba in Gurugram. But tell us what is going on over here. Amrut Fusion and Amrut Amalgam selling more than Glenfiddich and Glenlivet?
I love this discussion early morning. I can have it all day. But, I think yes, it's very exciting time for Indian malts, Indian whiskies, and I think for good reason, because the product is really speaking for itself. Let's first talk about the product and then talk about the validation. But if you look at, you talked about Amrut Fusion. Now, Amrut Fusion as a product, the barley, which is what the source of malt is, they get their barley from India as well as original peated barley from Scotland. So there's no compromise when it talks about genuinely peated. Similarly, if you look at another whiskey, say Indri, now they are barrel aging their whiskey in 3 different casks, which are completely unique in terms of a bourbon cask, in terms of an ex-French wine, and also a Pedro Jimenez sherry. So, the whiskey makers, the malt makers in India today are putting their heart, soul, money, and efforts into really creating a great product. And because of that, the international validation is streaming in. So if you take Amrut's case, Jim Murray, who's one of the world's most known whiskey connoisseurs, gave it 97.5 points on the Whiskey Bible. Similarly, the other malls have been winning world's best whiskey awards. In fact, as recently as 22. So it's really a proud moment for Indian whiskey on the global stage.
Many people would be interested to know what that Whiskey Bible is all about. Ashish keep talking about it. People should Google the Whiskey Bible because there's a rating for whiskies across the world. That's what the Whiskey Bible has. But here is the deal. I checked the prices, Ashish. Me and Karthik are wondering how this is happening. A bottle of 12-year-old Glenfiddich, Glenlivet and Amrut Fusion are roughly the same cost. They are 5,000 rupees a bottle. So how much of this is a function of pricing and distribution per se for Indian whiskies?
See, as you know, any international trade on liquor, so be it wine or whiskey, attracts a large import duty. Whereas the local made alcohol will obviously pay the local excise, but there is no import duty as such. So I think to encourage the entire homegrown industry, and this is across beverages, be it wine or whiskey or gin, the Indians have been able to create a great product, may not have that much kind of money on marketing spends, but they've been able to create a great product and price it at par with global competitors. So it does matter. Pricing is a critical strategy in this because entry-level trials only happen for a great product if it's priced decently.
Right, Karthik?
Hi Ashish, good morning. Nice to have you with us. Just help me understand from a consumer's perspective. You have thousands of people visiting your restaurants across the country on a daily, weekly basis. Do you really see that uptick in order placing for Indian-made liquor, Indian single malts, as much as, let's say, the global liquors? Do people come and really place orders at your restaurants for these Indian brands as much?
I think that's a great question, and I'll tell you what's happening on the floor at restaurants. And this is across restaurants, but I can give you a reflection of what's happening at ours. I think till 5-6 years back, bars used to hide behind, the IMFL tag, so as to say, and really put it lower down on the menu. Today, with pride, we are calling it Indian craft whiskies. We are calling it Indian single malts. We're calling it Indian artisanal whiskies. We're giving it pride of place on the menu. We're giving it bottle space. And it's a shocker because, not because the restaurants are doing it out of any pure heart for Indian whiskies, but also because the consumer is coming and demanding for these whiskies. And sales are going through the roof. These are consumers who can afford the finest of foreign malts, and they're coming in saying, we want to try great Indian artisanal single malt. And I think the key word here is that gone are the days where we are trying to mimic a Western single malt. So it's no longer an IMFL. It is genuinely artisanal. It's genuinely creative and luxury as a product. So I think that's spoken for itself. And yes, it is selling. It's selling very, very well. And the innovation in the space, if you see, like I'm talking about the different barrels, I'm talking about the different kinds of barley, there's a lot of innovation. So there's no aping another malt.
Okay, original made in India whiskies, which are finding great traction among the classic Indian whiskey lovers who traditionally loved Scotch. They said whiskey means Scotch, Scotch means whiskey, and they're the ones going to Ashish Kapur's Whisky Samba and asking for Amrut fusions these days. Ashish, you were saying some last word from you and we'll wrap this up.
Yeah, the Godawan, which is again an Indian single malt out of Rajasthan, recently launched, not in India, but at Cannes. So you can imagine an Indian whiskey launching on the red carpet just shows you the international appeal for the genuine whiskey.
Right. International appeal. Indians are taking to it not long before the international markets take to Indian whiskies. Here's fingers crossed for that. Ashish Kapur, thank you so much for taking time out to be with us here on Business Plus on News 9 Live this morning. Wishing you all the best with the Whisky Samba in Hyderabad. Wishing you all the success with that. Thank you so much for being with us. And with that, we have completely run out of time here on this show. Karthik, lovely being with you on the show. It's a wrap here from my side. This is Krishna Kumar signing off. Keep it with News 9 Live.
With all this gas, here, you must be wondering if I'm climbing a mountain. Well, let me give you a wider look of this place. This is Asia's largest mountain of shame.
A mountain of waste, almost the height of